Okay, gold. Um, what I'm seeking to do is give more educational value in these videos. With the release of the TrendPredator Pro, it's extremely important that if you are going to be following my lead in my approach to the markets with regards to trends, reversals of trends, reversals into trends and continuations, breakouts, breakdowns, in other words, and the momentum that's derived from higher time frame traders active in the market, whereby we then need to take into consideration the conditions of all of the time frames, the monthly, the weekly, the daily, and then what is happening on our day itself. And when you look at our day itself in New York, for instance, you can look at the time frames, the 8 hour and 4 hour. Each 8 hour range is a session. You have 3 8 hour ranges per day, depending on the asset, because sometimes you get the rollover at 5 p.m. or 4 p.m. the prior day, or commodities will open an hour later compared to the commodities and so on, to the Forex and so on. But generally speaking, you have 3 8 hour boxes per day: Asia, London, and New York. So the market is fractal, and therefore what happens on the higher time frame. So if you've got a monthly chart, for instance, you've got September, October, November. You've got September as the base. You've got October breaking September's highs. You've got November breaking October's highs, December breaking November's highs. And then in January, you're thinking, well, we've got an awful lot of breakouts from the previous months going up. So maybe January is going to plummet into all of those longs, i.e., the market is overextended to the upside. If you can have that on the monthly chart, you can have the same thing on the day itself. So if you've got Asia that maybe broke the prior day's New York highs, and then you've got London breaking Asia's highs, and then you've got New York opening in breakout higher than London's highs, then guess what? You've got a template that is potentially overextended on the day to the upside, and you can be in anticipation. If the higher time frames are also overextended to the upside, you can be in anticipation, even though you're in breakout, and we can look at gold in a moment. Even though you're in breakout across the higher time frames, if on the day it's breaking down, having been overextended either the prior day or on the day itself, then you might anticipate that will continue breaking down into all of the length in the market. Or on the flip side of that, it could be breaking down from the start of the day. Say Asia broke down, so you might have track traders up high from yesterday, and then Asia's breaking down below yesterday's closing price. Well, that could be the recipe if it's been breaking down for 3 levels, 3 sessions since the highs of New York yesterday. Well, if it starts to turn back up, well, then you could get this short squeeze, a rally that's going into what's been coming down all day, funded, if you like, from the higher time frame traders on the monthly, weekly, and daily chart that are providing momentum for the continuation. So let's get into gold and we'll have a look at that. The context of gold is an uptrend. There is no setup, nothing's been triggered as per the TrendPredator indicator and the style of trading which I approached the market with in the New York session. We can see the time frames. The monthly chart is somewhat bullish. We're inside of last month's range, but last month faked out low of the previous month low. So December broke up above November's highs, or it could be October. I'll have to check. And we're still bullish because of that. We haven't broken back down below the lows of might be November or October. I'll have to have a look. Wednesday on the week, we're in breakout on the weekly chart. Okay, for 3 consecutive weeks, we've been breaking to the upside. Now, that means that there could be some deceleration in the market after 3 levels of rise, either on the monthly, the weekly, the daily, or whatever time frame it is. On 3 levels of rise, we could be in anticipation of a breakout to the downside, a breakdown rather. Okay, because we've got an overextended market and we could be coming down. On the daily chart, we're inside of yesterday's range, so we haven't taken the high or the low of yesterday. Yesterday was a breakout day, so therefore the context of the daily, weekly, and monthly is uptrend still. We haven't broken any levels to regard that we are in an overall downtrend. But let's have a closer look. So, again, looking at the table, we're in an uptrend. That's the context of the market. This is the signals, the setup flasher, which will help us. If this were to give us a setup, we need to focus in on the session itself, the day. How is it set up? Does it align with a trade opportunity? Just because we get a setup doesn't mean we trade. But let's have a look. So we're inside of yesterday's range, and we haven't taken the high or low. Okay. Having said that, do we have trapped traders? I would argue that potentially, at least for the day itself, we had trapped traders from New York that were targeting the previous month's highs. Let's get into the actual template that I used to monitor this more closely. As you can see, yesterday broke Wednesday's highs, breakout. It was the second day of breakouts on the week, at least due to the inside day from Tuesday, because initially on Monday we broke down Friday's lows. So that's a scenario that, had it continued, of course it would have been bearish and you'd be trading with that, but it stalled on Tuesday. Indecisive, bears and bulls tug of war, barroom brawl. So you stay clear of that until you get a breakout. All right, so you don't want to fight inside the bar. You wait until you get outside of the bar and you fight on the street. Okay, so bulls are winning the battle outside of the barroom brawl. So you've got day one of bulls in charge. So that's day one longs. Day two longs as you break out of the high. Okay, and what we're in anticipation of is a continuation. We haven't got day three breakouts yet. We will do if we break yesterday's highs. And coming in to the target, which is last month's highs eventually. But what happened yesterday? Were traders too keen in that thesis that we were getting up to those highs? Yes, something I touched on yesterday. I suggested that they could be a pullback before the highs. I suggested that it could happen on the day, but it happened today instead in Asia and London. So these traders essentially are trapped while above the closing price of yesterday. That's the thesis. Trapped traders. Trapped. Trapped going long, targeting last month's highs. Everyone saw it, so no surprise that many traders tried to target it on the day, only to find themselves underwater when Asia started pulling traders down low, a little stop hunt before the real move. Okay, trapped traders. Now, the market, the context is still in an uptrend because we haven't technically broken any daily level. So this could just be a pullback, a stop hunt into those longs, punishing them for targeting the monthly highs and being stubborn and not taking profits. And what we could see is a reversal. And this indicator will pick up on the prospects of a uptrend reversal, such as it did over here. It would have done it here. It will turn into a 3-star with the trend, previous breakout, continuation, low of day, uptrend trade setup. And it does that because it's closing inside of that previous 8-hour box. So this is based on an 8-hour session. This is based on sessions. I think I talked about at the start of the video. We have 3 sessions on each day, 3 sessions of 8 hours. Okay, so it's quite a powerful signal, even though, now the reason why this didn't rally, perhaps, is because we've got trapped traders. So this was giving those trapped traders an opportunity to get out of break even, which could have either caused a continuation if all of the sellers were absorbed, but they took over. Okay, so those unwilling sellers that were trapped getting out of break even, overwhelmed, absorbed the buying, and it continued to the downside. And sellers emerged. So what could now happen if we get, for instance, a close back above the Asian box, the lows, the session, that would trigger a signal to go long. That would trigger a signal to go long following this peak formation high, a lower low, another lower low, and prospects of a squeeze. However, what I would prefer to see this London box to finalize. This is why I like to wait for 10 a.m. At 9 a.m. this will close. Potentially, it could close like this, perhaps, would be nice. And then in my window, perhaps we'll drop again, take out some stops below this 4-hour low here, pump up, give us a fake out low on the 8-hour. And then we've got 3L, like we've got 3L on the W weekly, 3L on the 8-hour, and that would be a lovely scenario to be buying low on the day for a potential short squeeze in line with the bullish trend. Having said that, we've already got 3 weeks of breakout, so perhaps we're not going to get anything almighty to the upside, but it could be the fuel needed for a move up to finally take out the monthly highs. If not today, potentially at the start of next week. Perhaps it will give us, we might close bullishly, perhaps. We might close bearish, we don't know, below the opening price of the day. But again, this is all in context in terms of cycles, what's happening on the previous days, and putting it all into context, enabling us to build a thesis for what to be targeting at any given point of time of the day and during the week. So that is one thesis. Alternatively, that may not happen at all, and we could just continue to squeeze lower and lower and lower because we've got plenty of longs in the market. For a long squeeze. Having said that, I'd much rather look for the long squeeze following 3L to the upside. We've only had 2L. So what I'd like to see is an additional breakout on the daily chart, and then be looking for the long squeeze after 3 days of breaking out. So I hope that answers some questions. I'm just reading back. We've got someone asking, gold may go massively low, 2579. Well, over time, I don't know that it would do it all in one day. Okay, yeah, starting today, following next week, possibly, but I would expect that we need another pump up to above the monthly highs. I'm just going to write that in there, pause the video. Yeah, so we might need to take out liquidity above the monthly highs to see a reversal in the market back into 3 weeks of rise. We might need to see 3 days of rise and taking out liquidity above the previous month's highs before, trapping traders. Again, this trapping traders scenario up high on the breakout of the previous month's highs before plummeting and then potentially correcting higher again in a continuation of the overall bullish bias on the higher time frames. Right, so we'll wrap that up. It's quite a long video. I hope it was educational. I'm trying to make these educational in line with the release of the TrendPredator Pro to put it all into context. It depends on how the day is setting up.